That Matthew McConaughey. All right, all right, all
Right. Right.
So things are happening in the background. There we go. We know I have to turn the volume down, or we're gonna have like some crazy kind of hey. There we go. All right, cool. Well, here we are again at another spot for the Lenders Lounge. I have Kelly Martin in the room with me. So thankful and blessed to have you here. Girl, I'm sitting here looking at that head wrap. Your hair is like, and you done squished it all in that hair
All
wrap.
right here.
We know about the hair game, though. We know.
Next Lenders Lounge, I'll let my hair be free. I just gotta sometimes tame it a little bit because yeah.
Oh my goodness. So many different facets and things that create who we are, seeing the elevation and the different levels of who we've become over the years, because back in the day, we used to have to keep our hair straight to keep people comfortable. And now we're like, this is it. Look. We don't care if you're comfortable. This is what my hair looks like. Like
And whether my hair looks like this or it's straight, I'm still gonna close your loan. So that's all that matters. Like,
well, not too many years ago, that wasn't. I need to be comfortable in the room that I'm in with the people I'm in the room, and what you look like has a lot to do with it. So I'm definitely appreciate the progression of that and professionals. Period. Because who we are helps people who see us before they actually talk to us. But as we're out in the world, they're like, she has an ear piercing, her nose pierced, her labret pierced, her hair is big as purple as green. She wear cowboy boots. So all of those things, I love how social media can see who you are before they reach out to talk to you. And I just don't mean us, I just mean people, period. So I love how we're like on our own little mini series and people could watch it until it's time
yeah.
to meet us.
I also love how social media has kind of normalized like being different, but people still knowing that difference does not mean unprofessional, right? So wearing big froey hair or curly hair or a head wrap or locks or whatever, how your self-expression doesn't mean lack of professionalism, it just means self-expression. I can be a lawyer with tattoos, I can be a doctor with piercings, and it still doesn't mean that I can't deliver your baby or argue your case.
Amen.
Or close your loan. So yeah.
Yes, right. Or close your mouth. Yeah, because with me being a hairstylist, it was easier for me to express myself in that way. But yeah, definitely. I totally agree, because we have to feel good with the person that we are on the inside to
Right.
exude and shine that light on the outside. So yeah, for sure.
Yeah.
Well, what, I'm gonna get off the soapbox. I've never been on one actually, but that's what people say when you go off on a tangent and you come back, or rabbit hole and come back. Look, I'm back. Look what my super. So I am Makeba Evans, and this is my YouTube channel, Make Moves with Makeba. I am a global real estate professional, able to connect you, home buyer, seller, Kelly as well, wherever it is that you want to call home. We have a network of lender partners, real estate professionals that we lean on to help that make sense for you. My stomping ground, though, is in Georgia, Metro Atlanta, but of course, anywhere in the state, I can hop in my car or my magic carpet if it's working and get there and take care of you and your family, your friends, your frenemies. It don't matter. I can take care of them because we all need somewhere to live. And this is Lenders Lounge. So Kelly Martin has come into the room with us. So thankful to have you here and share your expertise with those looking to buy, sell, invest, and need a loan. Because, of course, if you have cash, that good old green, and there's no need for a lender if you're choosing to hold your capital up in that way, but if you need a loan, Kelly Martin is the person for you to do that with. Kelly, briefly introduce yourself, please, before we officially get started with the Lenders Lounge.
Oh, no problem. My name is Kelly Martin. I am a licensed mortgage loan officer. I'm licensed in actually 49 out of the 50 states. I've been telling y'all this for the past couple months. New York is just a monster that, I keep trying to bang down New York's door, and New York is not letting me in. It has nothing to do with me though. I don't want y'all to think it has something to do with me. New York is just hard to get into. And Washington, D.C. I'm licensed in D.C. as well. I work for Edge Home Finance. In a former life, I actually used to do foreclosures. I used to terminate loans, and now I am originating loans because, as I have learned the other day, that when you help others, it's so much more of a blessing to help others than it is to take people's dreams away from them. So I am in the origination spot now, here to help you close any and every loan that you can think of.
Thank you. Thank you for sharing that. Something too, as Kelly shared, we've previously had other professions that we participated in, were a part of. So if you are somebody out there in the world, YouTube University, and becoming a real estate professional, I'm with eXp Realty, and like Kelly shared, so we are, she's with Edge. So if this is something that you guys want to make a part of those 7, 9, 10, however many revenue streams that we're now needing, reach out to us, because we love to teach and learn and have you come on board and be a part of our tribe of people that are help changing people's lives with real estate. So let's go ahead and officially get started. So this week we are speaking about those myths that people hear, Google, overheard when it comes to getting a mortgage. And Kelly is going to share many of those with us today. And one, that's a classic is this 20% down to purchase a home. Kelly, give us a little bit more about this.
So let me start by saying that once upon a time that wasn't a myth. I don't want you all to think that you're crazy. Like, hold up. I remember back in the day, it was definitely 20% down because yes, it used to be 20% down. But then with the onset of mortgage insurance, FHA, Fannie Mae, VA, well, actually, VA is up. We always wanted to treat our veterans right. So, and USDA, they've made it so that you only have to pay a fraction of the down payment, not the full 20%, right? So I'll go over what each one is. So with FHA, you put 3.5% down. So say, for instance, you have a $100,000 loan, you put down $3,500, right? And the thing is with FHA is that when you put the 3.5% down, you will have to pay mortgage insurance for the life of the loan. However, you could also put 10% down with FHA, but if you put 10% down, you'll be paying mortgage insurance for 11 years. So just a FYI, 10 will get you 11. If you put 3.5% down, you have to pay it for the life of the loan until you refinance or sell the home. There are Fannie Mae and Freddie, which are conventional loans. If you are a first-time home buyer, you put 3% down. And if you are a subsequent home buyer, you put 5% down. Right. So again, $100,000, you put $3,000 down for 3%, $5,000 for 5%. And then with VA and USDA, those are like the golden child because you put absolutely nothing down. Veterans put 0 down, USDA 0% down. It's both a goose egg, but both of them you do have to pay I'm sorry. You do have to pay a fee. I think it's 1.15% of the loan in order to make it so that that fund can keep replenishing. So you can keep putting 0% down. So again, long gone are the days, but don't get me wrong. If you have enough to put 20% down, put 20% down, because if you put 20% down, you do not have to pay any type of mortgage insurance.
Right, right. Definitely. But that we don't want that to be a barrier, for somebody of not taking the steps, because if they feel like that is not a possibility before they even open the door, then that could be more time that you're paying somebody else's mortgage, because that's
right.
That's what's happening. You paying rent and your neighbor like loud and leaving the dirty diapers outside the door. You got to go outside and he like, Oh my God.
Or
Trash
I
talk.
remember when I used to rent and my neighbor, either they would have kids or they were loud upstairs and you have to take the broom and, you know, and be like, hey, like you loud up there. So yeah, I mean that freedom of not having an upstairs person or you
Mhm.
having to be quiet because you are that upstairs person
Yeah.
comes with home ownership.
That's true. That's true. And we cracking jokes, y'all, because that's how we get lighthearted and work our way through all of these things. Because this stuff that
Exactly.
happens, even if it wasn't so good, when you get on the other side of it, we gonna want you to laugh through it.
Right, right, exactly, exactly.
Okay, so something that many people definitely feel like is a deterrent. Sally Mae, is she still around?
Is it
Mojito,
Navi?
whatever they Navient, yeah, whatever.
I don't even remember what her
They
name is.
keep changing the
Girl,
name.
she on the run. She in witness protection, so she keep changing her name. So, but student
Student
loan.
loans. What about those? Because people be like, oh my God, I owe 553,022 cents. Lord, I can't get a house. Tell him, Kelly.
So let me start by saying that student loans do not automatically disqualify you from getting a loan, not at all.
Yeah.
If you are currently paying on your student loans and Fannie or I'm sorry, and Sally Mae Navient, whatever she's going by these days tells you an exact amount of how much you have to pay, that's how much we'll put as your monthly payment. So if you owe $100,000 in student loans and your payment is $600 a month, then we'll only include the $600 towards your debt to income ratio, and that's it. And that's how much we'll include it for each month. But say, for instance, like a lot of people, you keep deferring them things because you're like, you know what? I'm going to die with my student loans, so I'm going to defer them for the rest of my life, which a lot of people do. I'm not saying that what you should or shouldn't do, but a lot of people do it.
Yeah.
What we will do is we will either take 0.5% or we will take 1%, depending on which loan program you go with. And that's what we'll include towards your debt to income ratio. So again, if you have $100,000 worth of loans and we include 1%, we'll include $1,000 as your monthly payment and that'll be included as your in your debt to income ratio, or it'll be 0.5%, which will be $500. So for FHA, it's 0.5%. For Fannie Mae, it's 0.5%. But for Freddie Mac, it's 1%. So it all depends on what loan type you go with.
Got you. Okay. Okay. Thank you for clarifying that. Something else too, the credit score. What does the credit score need to be? I have a 620. Can I qualify for a home loan?
Ooh wee. So, credit, a lot of people have very challenged credit, and there's nothing wrong with that. I can put you in a house with challenged credit.
Mhm.
All you need is at least a 580 score. A 580 score will put you in a home. FHA will approve you at a 580. And funny enough, FHA will actually approve you less than a 580. You just got to put 10% down. So it's like an inverse proportion. The more money you have, the less credit score you will need. The less money you have, the higher credit score you will need with FHA, right? With a conventional loan, you need at least, I mean, conventional is 620. However, in order to get the best pricing for conventional loans or optimal pricing, you should have over a 700. So, but again, we can always go FHA with a lesser credit score because then you'll have to pay less mortgage insurance. You'll put 3.5% down, but your mortgage insurance it's always a constant. It doesn't go up or down based on what your credit score is versus conventional. The higher your credit score, the lower your mortgage insurance.
Got you. Something too, when people hear money down, it's not like that 10% vanishes. It still goes towards your equity.
Equity.
Your money.
Exactly.
Right.
Exactly.
Yeah. Yeah.
And that is a great point. Like you will have equity in your home. So
Mhm.
yeah.
Cool. Okay. So VA. Now, my father served in the military. My grandfather served in the military. Such a disciplined space to be in, whatever form of the military. Thank you to all of the veterans. We want you to get 100% discipline.
Yeah. Yeah. I pray you all get 100% disability and you all get those checks every month. Yeah.
Right.
But
Even
without
if you
anything
never
being
saw
seriously wrong
battle,
with you. Without anything being seriously wrong with you.
without anything being wrong with you, you never saw battle, you had them hard shoes on, your back hurts, your feet, whatever the
Yes.
reason was, yes, we want everybody to qualify because that was a sacrifice. I
Yes.
think about when I go work out at the gym and my person is trying to motivate me to get me to do 10 more squats. I just think about basic training and all of those things when somebody is loud in your ear, one grown person telling another grown person, this is what you are going to do. We need you to do this to represent us and to save our country and to make sure that our people, the Americans, are safe.
Yeah.
Stateside, abroad, wherever they are. So thank you so much for your service. Was something to be said about that, the hospital benefits that are received, but the benefits with being able to purchase a home. What does that look like for a veteran? And we don't want you to think that you can only use it once, because I hear people so many times, I haven't used my veteran benefits yet. I'm going to wait till I'm like, you don't have to wait.
Right. No, you don't. You honestly don't. So when it comes to VA loans, you have something called entitlement, right? And so we will calculate how much entitlement you have or the amount of entitlement you have. And that's what can be used to purchase your home, right? And so every time you purchase a home, when you sell it, your entitlement recoups itself. So it's not like you use it once and you don't get it back. When you sell your home, that entitlement recoups itself. And as a veteran, please, 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 please use your benefits. As Makeba was saying, like you all fought so hard. And the last thing I want is for those benefits to go to waste. And a home is the easiest way to use those benefits because, like I said earlier, you guys have no down payment, like no down payment whatsoever. Unlike us civilians, where we got to put down 3%, 3.5%, 5%, 20%, however much we want to put down, you guys can put down absolutely nothing. Now, what I'm not saying is that you don't have to you don't have to pay closing costs, because closing costs are a whole other aspect of the mortgage, of your mortgage, but you don't have to put a down payment down. However, if you have a great real estate agent like Makeba, you can get seller concessions, and therefore you might not even have to come to the table with closing costs either, which would be amazing, right? So another thing about VA loans, which are so amazing, besides the zero down payment, is the no monthly mortgage insurance. So I've been saying this whole time, mortgage insurance, mortgage insurance. FHA has mortgage insurance. Conventional loans, if you don't put down 20%, have mortgage insurance. VA, absolutely no mortgage insurance. You don't have to pay. It's kind of like money just being used to make sure that you don't default on your loan or you don't not pay on your loan. That's what mortgage insurance is. It's ensuring that you'll pay your mortgage. But
Right.
VA does not require that at all. Not to mention, when it comes to all of the loan programs, VA has the best interest rates. Like VA interest rates trump and I mean, not to say it like that, but they trump everybody else's interest rates. So make sure you use your VA loan. And then you have flexible guidelines, especially when it comes to like debt to income ratio. Your debt to income ratio could go as high. I have closed a loan where the debt to income ratio was 65%, which is unheard of, right? So that means that 65% of how much you bring in is going towards debt,
Mm-hmm.
which is amazing, right? So just make sure that you use those benefits like no other. And as a seller, the reason why you should want someone that has VA benefits is a fully underwritten VA buyer can be as strong as any conventional buyer. Um, Preparation matters more than loan type. And then great communication between the lender and agent wins the offers, right? So it's not a disservice for you to have someone with a VA loan. In fact, it could possibly be easier for you because they require less money to bring to the table, which means that the deal will probably go through.
Mm-hmm.
So yeah, just sellers use those VA buyers, and in buyers, make sure if you are a veteran, use those benefits.
Yeah, definitely. Look, and the widow of a veteran,
Yes. Yes.
as well. Making
Yes.
sure the assumptions, we want to release those and ask the proper questions to the professionals. So if you know something we don't know, because you do, as somebody purchasing a home, give us what you got,
Yeah.
so so we can help you make the best decision for sure. Now the mattress money, we'll talk about that later.
Oh
Okay,
yeah.
so
Woo.
now we don't want to know about that. Okay, self-employed individuals. What does that look like for those buyers? How are they qualifying? Because a lot of them are like, they're not keeping the right records. I mean, discipline is important. If you know in 2 years you're going to purchase a home, we need to properly plan, like you said.
Right.
So having that conversation before you're deciding to make that decision is important. But yeah, Kelly, please let us know what the journey looks like for a self-employed buyer.
So the myth here a lot of times is that self-employed buyers, they never qualify, and that's just completely false, right? Um, Especially since COVID, when there has been an uptick, I'm sorry, in the gig economy, like self-employed, but they have created so many different products for self-employed people. So we have bank statement loans. And a bank statement loan is merely a loan where we look at either the past 12 or 24 months of your bank statements, and from that, based on your deposits into your bank account, we determine what your monthly income is, right? Also, you could just do a regular conventional loan. However, we would need your tax returns. Now, I know because I'm self-employed, I know as a self-employed person, you try to write off everything, including the kitchen sink, right? And so what happens is when you try to write so many things off, it makes it so that your actual usable income is very low. So a lot of times with self-employed borrowers, it's hard to use tax returns because you guys write off so much that your actual income is so low that we can't even qualify you for as much house as you would actually need,
Yeah.
right? So bank statement loans are actually really good for self-employed borrowers, especially if you are getting an influx of just cash flow into your account because of the type of product that you are peddling. And then last but not least, DSCR loans, especially for investors, because the beauty of a DSCR loan is the fact that it's not based on income at all. And I think last time I did Lenders Lounge, I went over the different types of loans. A DSCR loan is a loan that is completely based on what an investor can get in rent from that loan. So,
Mhm.
for example, if your mortgage is $1,000 a month, but the based on the rent of the area that you are trying to buy your DSCR home in, it can get $1,200 a month, then you will definitely get that mortgage because the ratio is high. The ratio is above the amount that you're getting per month is above the $1,000 mortgage that it's going to cost.
Mhm.
So and that has nothing, absolutely nothing to do with your income and everything to do with how much rent you can get. So with self-employed borrowers, come to me because I can figure out a way to make it so that whatever income that you are getting, we can put you in the right loan product.
Got you. And that's a great segue into my next question about I don't make enough money.
Oh, so a lot of people fear, like, hold up, you know what? I only make $40,000 a year. How am I ever going to afford a home? And let me tell you, there are two concrete ways that you can afford a home. Number one is you can get a non-occupying co-borrower. So say for instance, you are fresh out of college, right? And you were like, you know what? I don't want to rent. Like, I don't want to rent at all. You can get a parent to co-sign on the loan for you, and therefore they are a non-occupying co-borrower, and their income will be used in order to qualify you for whatever home that you want. Now, mind you, when it comes to this non-occupying co-borrower, if they own a home at the time, you'll have to put 5% down. If
Okay.
they are a first-time home buyer, you only have to put 3% down. And if we go FHA, you got to put 3.5% down, regardless if they own a home or not, because FHA is always 3.5%. The
Mhm.
second way that you can get a home is to get a gift. A gift is merely money that you are getting from someone else who is a relative or someone really close from you. And they are literally stating, hey, I am giving this person this money and they do not have to pay me back. right? And so they'll have to write an actual certified letter stating, hey, I'm giving this money over and they do not have to pay me back. It is not a loan in any way, shape, or form. So if you don't make enough money, there are ways around that in which we can qualify you for a home and get you into a home.
Perfect, perfect. Wonderful ways to put the pieces to the puzzle together to make everything work out. You know, our goal always to change your life with real estate by giving you the tools and the resources to help decide what options, you know, could look like for you. You know, it's so many ways to balance things out, you know, because we have people that are house hacking. You buying a house and you renting your rooms, and you have another property connected to the home. Depends on where you are, so I'm not going to say the wrong terminology, because it'll definitely change your life if you go ask the wrong question about this additional piece of property on my land.
Right, right.
And it's bringing you income, you know, depending on what county, what township, where you are. If you don't say the word properly, they're gonna no. Instead of helping you properly word it, so you can get exactly what it is that opportunity was created for. So let's speak about those people who have children and they have decided not to go through the court system, because I never wanted my people, you know, I have 6 sons, so I'm hoping that whatever happens with the mothers of the children and all those things, I don't want to get the court involved ever, never. When I separated from mine, that was not my thing. We can work it out. I don't want nobody knocking on your door, taking your driver's license. Like, we didn't need them before, we don't need them now. We better not. Look, so for those people who don't have that court mandated child support, how can they use that money, that income, to help them purchase?
So a lot of people, so the myth here is that if the government or if the courts are not involved, then that money cannot be included as income, right? And that is just completely false. If you have an agreement with your with your ex-spouse or with the parent of your child, stating that every month you're going to give a certain amount and they give that certain amount, all we need is 12 months showing that for the past 12 months, they have given you the same amount, and that's it. And we can count that towards your income. Okay. So if you have, whether it's Apple Pay or Zelle or Cash App, like it doesn't matter where it comes from, just as long as around the same time every month they deposit money into your account and it is the same amount over the past 12 months, we can include that as income. And so therefore, you don't even have to worry about that. And then also, let me also state that if you are on Section 8, I want to go back to I don't make enough money. There is a program with Section 8 that allows you to use your Section 8 benefits towards your mortgage. It is included as income, right? So if right now your Section 8 benefits give you $1,500 a month towards housing, you can use that $1,500 as income for your home that you want to purchase, as long as you're going to get it at least for the next 3 years. All right. Going back to child support, it doesn't matter whether or not it goes through the courts or not. You can use those child support benefits as long as you can show that you've received it for the past 12 months. You can use that as income. However, it has to continue for at least the next 3 years. So if your child is 17 and you know people be cutting them off at 18, we can't use it, unfortunately. But if your child is
going to college, look.
I mean, it all depends on your child support. It all depends on whatever agreement that you all have, right? So if they're going to college and your child's parent decides that they still are going to pay child support, then we can use it, right? But if they're cutting them off at 18, then we can't use it. It has to continue for at least 3 more years.
Yeah. I saw you trying not to say baby mama, baby daddy.
I really was. I was trying. I was really trying.
Yeah. See, this is what I'm talking about. I love these environments before you choose Kelly or I. you can see our energy. Like I don't say we're making light of things, but we are. Life happens. Things happen.
Yeah.
I thought this person was going to be my person forever. Baby mama, baby daddy, that's funny, but nobody wants to be called that.
Right.
Mattress money, that's just something that people used to do with their money because they didn't want to take it to the bank, so
Oh, let me speak on that right quick. Hold on. It's
okay.
funny that you bring up mattress money. If you have mattress money, and I'm looking at you, if you have mattress money, put it in the bank. Put it in the bank. We cannot use mattress money towards a down payment or closing costs. Let it season for 3 months because all we need is your last two bank statements, right? When we are looking at things, we are looking at the last 2 months. So if you have any mattress money whatsoever, please put it in the bank today and then holler at me in 2 months.
That's that
Okay.
plan.
That way it can season and that way we won't even know that it came from because I just want to make sure that any money you have and that you want to use can be used towards your home, that you want to use towards your home.
Right.
All right. So yes, do not come to me like Kelly, I got $5,000 buried in a floorboard. I'm gonna look at you like, well, I can't do
Girl,
nothing.
I be playing poker, honey. I be at the card table. Definitely. I mean, that's the same thing again, like I mentioned earlier. If in 2 years, self-employed person, that you're going to purchase a home, you're going to have to not write everything
Off
off.
you.
It's a
Yeah.
sacrifice, not a sacrifice. I mean, it's definitely elevation in your life, meaning we have to be a little more responsible with that paper trail for
Yes,
sure.
yes, yeah,
Unless you're paying cash, I mean, but if you want a loan, this is how you do it.
yeah.
This is how we do it. I can't. I'm sorry. I sing, I dance, I shimmy, I do it. All we do is this. So that's what you get with me. I grew up in front of the TV listening to the radio. I'm the only child. So you have to entertain myself and it continues.
Hey, nothing wrong with it.
Well, thank you, everybody. Again, I am Makeba Evans, global real estate professional, a huge referral network, all 50 states, several countries. I can help you elevate your life, your family's life, your friend's life with real estate. Kelly is my preferred lender partner here in the room. We have known each other. We've grown up together.
We have, oh my God.
We've traveled the world together.
It's been 22 years. Yeah. Yeah.
When her last name was Hayes.
Yes. Yes.
So we are definitely here. Kelly, tell people how they can reach you. I'm going to leave it in the description as well, wherever you guys are watching this.
So again, Kelly Martin, I am based out of Georgia, but I service 49 out of the 50 states in Washington, D.C. I work for Edge Home Finance. You can reach me at Kelly with a Y, KELLY.Martin, like the show, at edgehomefinance.com. My phone number is also 301-806-0959. And I look forward to speaking with you all shortly or speaking with you all regarding your mortgage needs. Talk to me
Yes,
soon.
definitely. So whether you're watching this live or on replay, we dip into the comments periodically. So if you have any questions, you can leave them, or you can definitely call us, beep us if you want to reach us. We are here. Yes, TV girl, it's in there. All right, everybody, enjoy. We will see you next time on the Lenders Lounge. Be safe, help change your life and other people's lives. We know we're making folks smile. We want everybody to get home safely, to embrace their loved ones and build those wonderful memories in the walls that Kelly and I are going to help you get your house to create those memories in. See you next time. Talk